All right. Day six. Day six. So woke up on time today. Well, I was already up. Well, yeah, I had to come back home and everything. But yeah, I got home on time. Started work on time today. Well, 3 minutes late. I was supposed to start at 7:45, but it's 7:48 right now. But it's okay. But to get into it right now. Got my coffee. Yeah, got the coffee. I put an espresso shot in here, so this may help me stay up and not fall asleep, so I can actually get my 6 hours done. Maybe we're gonna see right now. But yeah, up and everything. Have my breakfast and everything. Oh, yo, ready for day six. Let's get into it right now.
Round 1.
All right, day six. Yeah, day six. Well, day six was supposed to be for yesterday, but bro, I tried everything to stay awake. I got coffee. I put an espresso shot inside of it. It still did not work. An hour in, I knocked out. I was so tired. So even yesterday night, I said, you know what, I'm gonna just do my work tomorrow night. Yesterday night instead. It still did not work. I was so tired, so I said, you know what, I'm gonna just go try sleeping early. Maybe that's one of the issues, because I usually just get like 2 hours of sleep like every single night. So I said maybe that's one of the issues. So let me try sleeping a little bit earlier, and then trying to wake up on time. So last night I got probably like 7, 8 hours. Nah. I got like 4 hours, 5 hours last night because I was up like. Although I was sleeping, I was resting, whatever, but I was still like up. I wasn't fully up, but I was definitely up. So I slept for like maybe 4 or 5 hours, and then I was up for the rest of the time. But I feel way more energetic now, actually. Yeah. So we're about to get into work block B now. Actually, I just did work block A. Yeah. With work block A, I definitely finished that. Like I finished the whole thing. I did the 2 hours or whatever. I drank some coffee before starting. I finished it or whatever. So yeah, I'm good now. So I think maybe sleeping, getting sleep the night before definitely helps a lot. I think maybe the coffee by itself doesn't work. You need to like sleep and also drink coffee to stay awake throughout the days. Because right now I'm awake right now. I'm awake right now. Even though I was kind of like yawning or whatever during work block A, I'm definitely awake right now. But yeah, I'm gonna give you a summary of work block A now. All right, so just finished work block A, and what I learned is trading divergences, and also I'm also on the high school level of baby pips, which is course 6 out of 11. So right now I'm on course 6. So I had to do like 5 more, including this one. I might say like 6 more. Yeah, well 6 more. Yeah. So trading divergences. There are two different divergences. There are regular divergence and there's hidden divergences. With regular divergences is when price is doing one thing but the oscillator is showing a different thing. So let's say price is showing higher lows, or price is doing higher lows, but the oscillator is doing lower lows. That's a divergence right there. And how you can trade divergences, divergence shows the top of a trend or the bottom of a trend. So if you see a divergence, you can get in before the trend even occurs. So let's say you see on price, you see a lower high, but on the oscillator, which is the indicator, you see a lower low. That kind of tells you that price is going to be doing something else, or price is going to be retracing, reversing, or continuation. It's either. With hidden divergences, it's a continuation of the trend, and with regular divergences, it's a reversal. It's a reversal or a retracement of trend. Yeah. So with divergences, it's basically like this. This is how price and oscillator should be working, because they should be working hand in hand. If price is doing a higher high, oscillator should be doing a higher high as well. And oscillator is an indicator. Indicators that show that kind of range between two different price points. But if price is doing a higher high, the oscillator should be doing a higher high as well. If price is doing a lower low, price should be doing. If your oscillator is doing a lower low, price should be doing a lower low. But if price and the oscillator is showing two different things, that's a divergence right there. With regular divergences, there are two different divergences for regular divergence. It's bullish divergence, regular bullish divergence, and regular bearish divergence. So starting off with regular bullish divergence is when a price is showing a lower low, but the oscillator is showing a higher low. This usually occurs in a downtrend. So let's say price is going down, and price is showing a lower low, but while the oscillator is showing a higher low. That kind of shows you that price is going to be reversing up, and you'll see that before price actually does reverse. So you basically see this before price even comes, and you'll see this before you'll be getting in on a trend before the price occurs. That means the chances of price reversing back to the way you don't want it to be going is very low. That means the amount of pips that you'll be receiving off of that reversal will be very high. And how it looks is like this. Price is going down from a downtrend. Price is the lower low, on the oscillator price is doing a higher low. So this will tell you that price is going to be going upwards now. A regular bearish divergence, price should be doing a higher high while the oscillator is doing a lower high. So, and this usually is found in an uptrend. So price is going to be going up, price is showing a higher high while the oscillator is showing a lower high. And it's basically the opposite of the regular bullish divergence. So I'm gonna show you how it looks right now. This is how it looks. Price is in an uptrend right now. Price is a higher high, but the oscillator price shows a lower high. It's the signaling that price is going to reverse. Price is going to reverse downward, and you'll probably be getting in onto the trend before price even goes lower. But it kind of shows you that you should pay attention to what price is doing, because there's a like a difference in the oscillator and the price. As I said before, the oscillator and price should be hand in hand. So if price is showing one thing and the oscillator is showing a different thing, that should tell you something. For hidden divergences helps you see when price is going to be doing continuation. How that works with hidden divergences is there are two different hidden divergences within hidden divergences. The first one is bullish divergence, hidden bullish divergence. Second one is hidden bearish divergence. First off, I'm going to start off with the hidden bullish divergence. Alright, so with hidden bullish divergence, price should be making a higher low, and the oscillator should be making a lower low. So, and this is usually seen in a uptrend. So price is going up, price is going up, price is making higher lows. If the oscillator is making lower lows, that means price is gonna be continuing to go up. Yeah. How that looks is like this. Alright, in an uptrend, and price is making higher lows, but the oscillator is making lower lows. There's signals that price is gonna be continuing to go up. For hidden bearish divergence, price should be making a lower high while the oscillator makes a low or higher high. So this is usually seen in a downtrend. So price is going down, price makes a lower high, then the oscillator should be making a higher high. This is a signal of a continuation of the trend. And how that looks is like this. Price is in a downtrend, price makes a lower high, or the oscillator makes a higher high, which signals price is going to continue to go lower. One thing to keep in mind though for divergences is this is just an indicator. You don't use this to trade itself. You can you use other things combining with divergences to see if price is actually going to be doing that. Let's say you're a trend trader, you see this happen, so this would let you know that okay, price is gonna be going lower now, and you obviously do your support and your resistances using divergences to then get into the trade. You don't only see divergences, or you see okay, price is doing this, oscillator is doing this, let me get into a trend. You need to see other things showing towards that as well before you get into your trend, before you get into your trade. Yeah. Now we get into work block B. Get into it.
Round 2.
The next day.
So yeah, this is like a day later. Yeah. This is basically day 6, but part 2 of day 6. Day 6 was initially started yesterday, but I had to go do some things. It's unexcusable. I'm gonna be honest. It's unexcusable. I should have finished my work first. But yeah, it's a day 6 part 2, which is the next day. I just finished work block B. And I know I didn't finish my work yesterday, so I did some push-ups. I did 100 push-ups since I didn't finish my work yesterday. And so that since I started work later on today, I started work today at like I'm gonna say like 9. I started work today at 9. Right now it's 11:07. Yeah. So I did 100 push-ups. I'm gonna input the clip of it of me doing 100 push-ups here. Yeah. So I'm gonna give you guys a summary of what I learned for work block B. Yeah. So what I learned was different trading environments. And what I mean by that is this. When you are a trader, there are different environments in the market. There's an uptrend, there's a downtrend, and there's a consolidating or sideways market. For whichever strategy that you use, you need to realize what market you are trading in, which equals the strategy you will use. Example, you're not going to be using a trending strategy like or a trending indicator in a consolidating market, and you're not going to be using a ranging strategy in a trending market. So in these lessons, it was teaching me that I need to know, me as a trader, I need to know the differences in trading markets before I choose if I am going to trade or if I'm not going to trade. So what a trending market is. A trending market is a market that is going up. It's going up or going down. A trending market is an uptrend, and a trending market is also a downtrend. A range bound market or a consolidating market is a market that is moving sideways. It's moving sideways between 2 points, between a resistance point and between a support point. Price is just going up, going lower, going up, going lower, going up, going lower. There's no one direction for price. It's just going up, down, up, down, up, down. That's called a ranging market or a range bound market or a consolidating market or a sideways market. So yeah. The next thing is I learned how to use different indicators for different markets. So how I would use, okay, let's say for a trending market, how I would use a average directional index indicator for a trending market is like this. With the ADX, it measures price from two different between two different parts, between 0 to 100 for the ADX. So for the ADX, if price is over 25, that means price is trending. If price is below 25, that means price is not trending and price is ranging instead. Also for the ADX is a non-directional indicator, and what I mean by this is even if price is in a downtrend or in an uptrend, the ADX will not show what price is doing. It'll just show if price is strong or if it's weak. So let's say price is in an uptrend right now, and you see on your charts price is in an uptrend. On your ADX, price will not show it that price is in an uptrend. It'll just show how strong price is in that moment. So yeah. All right, for the next one is moving averages in the trending market. So how you can use moving averages or MAs for short, and to figure out if market is trending or not is like this. You will put 3 different SMAs or simple moving averages onto your chart. The first one will have a period of 7. The second one will have a period of 20, and the third one will have a period of 65. And they will all be simple moving averages or SMAs for short. Every time that those 3 moving averages converge together, every time they converge together and then expand, that will tell you if price is in an uptrend or a downtrend. So if the 7 SMA moving average is at the top, and then the 20 SMA moving average is in the middle, and then the 65 SMA average is in the bottom, that means price is in an uptrend. So let's say all the moving averages are diverged at first, and then they come close together, and then they expand. If those 3 SMAs do those things, which is the shortest one is at the top, the middle one is in the middle, and then the longest one, which is 65 SMA moving average, at the bottom, and they all expand, that means price is going to be going on an uptrend. Price should be going up. But if, let's say, the 65 SMA is at the top, the 20 SMAs in the middle and the 7 SMAs in the bottom, and they're all expanding, that means price is now in a downtrend. Yeah, and that's how you can use the moving averages to figure out if price is trending or if it's consolidating. And if it's consolidating, it's because all those SMAs are now close together. So if they're close together, that means price is ranging. But if they're far apart from each other and is showing what I said before, which means what I was saying before is that the S that's the shortest is at the top and the longest SMA is at the bottom, that means price is trending. So yeah, and also flipped, that means price is trending downwards. For the other way, price is trending upwards. So yeah, that's what I mean by, and that's what I mean by moving averages can be used as a trending indicator. The next one is Bollinger Bands. This is another indicator that you can use to show if price will be going in an uptrend or if price will be going in a downtrend. And how it is used is like this. You will then insert two Bollinger Bands onto your chart. One of them having a 1 standard deviation and the other having 2 standard deviations. When you then implement these indicators onto your charts, the 2 lower bands should be close. They shouldn't be close. The 2 lower bands, if price is trading or is between those 2 lower bands, that tells you that price is in a sell zone. So if price closes in between those 2 lower bands, price is in a sell zone. And if price closes between the 2 top bands, that means price is in a buy zone. And if price is in the middle of the two Bollinger Bands, is in the right in the middle of the 2 Bollinger Bands, that is the no man's zone. Right there, that no man's zone is where price is consolidating. Price isn't in a trend, it's not in an uptrend, or it's not in a downtrend. And now I'm gonna show you how that looks. So right now I have implemented 2 Bollinger Bands onto my chart. First one is a Bollinger Band that has a standard deviation of 2, and the next one has a standard deviation of 1. Right now price is trading in the lower bands. Before I even get into the trade, or before I even say this trade is a good one to get into, I need to make sure that price closes in between the two lower Bollinger Bands to show that this is a sell zone. So now that price closed in between the 2 lower bands, I now signify this price right here as a sell zone. So we get into my trade, and now see price went lower, price went low. And now for the opposite, price closed in in between the top standard deviations or Bollinger Bands. Price closed in between the 2 Bollinger Bands on top. That means I would get into a buy zone, which is right here. I just get in because price closed right here. Price open here, close here, I will get in. And then price went up. Of course, you're not supposed to be using only Bollinger Bands, especially like this indicator, these 2 indicators, by itself to trade. But yeah, that's how it works. And if price is in the middle, which is right here, that means price is probably consolidating or ranging. And this is exactly what's happening right here. Price is in the middle right here, and price is consolidating or ranging. Consolidation and ranging is the same thing. Now for a range-bound market. As I said before, a range-bound market is when price is moving between 2 price points, just up and down, up and down, up and down. There's no significant trend to the market. With a range-bound market, there's also indicators you can use to see if price is in a range-bound market. One of them is ADX, average directional indicator, average directional index indicator. It can also be used to see if price is in an uptrend or if price is in a downtrend. As I said before, if price is above 25, price is in a trend. If price is below 25, that means price is in a consolidating or a sideways market. And I'm going to show you how that looks on the chart. As you can see right now, prices, let's drag this over a little bit more. Price is below 25. I put the blue line there so you can see better. Price is below 25 right here. And on the chart, price has no significant trend. Price is below 25. Price has no significant trend. Price gets above 25. Price is going a downtrend. Of course, this indicator is a lagging indicator. And what I mean by lagging indicator is that it'll show you what price is doing after it does it. Yeah, but so price right here gets below 25. I mean above 25, and now price is going down. And remember, with a average directional indicator, index indicator, ADX, it doesn't show if price is in the uptrend or downtrend. It only shows if price is strong, is trading strong, or if it's trading weak. Again, if it's below 25, it's weak. If it's above 25, it's strong. So yeah, right now price went above 25 and it's in a downtrend. So yeah, that's how it works. How you can use Bollinger Bands. How you can use Bollinger Bands to see if price is ranging is if you add a 14 period Bollinger Band onto your chart. If the Bollinger Bands are contracting together like this, they're getting small, that means price is in a ranging market. If price is getting high, if the Bollinger Bands are expanding, that means price is creating a trend. It could be a trend to the downside, it could be a trend to the upside. And you can also use this as a breakout indicator. This indicator could show if a breakout is going to occur. Because if you see price is in between the two Bollinger Bands and it's tight, the Bollinger Bands are tight, and you see the Bollinger Bands are expanding, that should tell you, okay, then the price is going to be having a breakout soon. And you can also use the rectangle pattern to signal if price is actually going to be having a breakout. So yeah, that is how you can use different indicators to tell you if price is in a trending market or in a raging market. Yeah, now I'm about to get into my next work session, which is a work block C for the video, but work block B for today. Yeah, so let's get into it.
Round 3.
Yeah, so just finished up with work block B. Yeah, I'm tired. I'm not gonna lie. I'm tired. I'm tired. It's 2 a.m. in the morning right now. I am tired. I'm not gonna lie. But what I learned for work block B, I learned trend retracements and trend reversals, the difference between them. So with trend retracements are when price is in a trend but pulls back for a little bit before it continues in the trend that it's already doing, and it's already going in. Yeah, so let's say price is in the uptrend right now and then price pulls back a little bit. You don't know if that's a retracement or a reversal, but how a retracement is when price is going up, price pulls back, and if price goes back up again, that right there was a retracement. And it's the same thing for a downtrend. If you're going in a downtrend and price goes up for a little bit and goes back down, that's a retracement. And for a reversal is if price is actually going in an uptrend or whatever, and then it goes down, but it doesn't go back up. It doesn't retrace back up. It just keep going down. So example, price going up in an uptrend right now, price retraces down, but it doesn't create a uptrend again. It just keeps going down, That is called a reversal. So retracement is when price goes up, goes back down, but keeps going back up. A retracement is a reversal is when price is going up, goes down, creates no retracement, and just keeps going back down. That's the difference between a retracement and a reversal. And now, how you identify the difference between a retracement and a reversal. So how you can identify the differences between a retracement and a reversal by using specific indicators. So you could use a Fibonacci retracement to see if price is actually retracing or doing a reversal. So how you would do this is you would pull out your Fibonacci retracement tool. You would pinpoint the low of that trend and the high of that trend before it creates a retracement, or if you think it's a retracement. So you put your Fibonacci retracement tool to the low and then you put it to the high of that retracement. If price goes down and stays at a support level of the retracement tool and it goes back up, then you know it's a retracement. But if price goes up, touches the top of that retracement tool, goes down, breaks through support and keeps going down and breaks through the next support, and you know price is reversing and it's no longer there's no way it can be a retracement now. I have brain fog right now. Yeah, so there's no way price could be a retracement. And the levels on the Fibonacci retracement tool that serves as support on a uptrend of a Fibonacci tool is 38.2, 50%, and 61.8. Yeah, I have it in front of me right now because I did not remember. So yeah, that is how you can see if price is retracing or if price is reversing for a Fibonacci tool. You can use that as an indicator to see if price is doing either or. A next indicator you can use is called pivot points. With pivot points, when you add this indicator onto your chart, it uses these points are used as support and resistance levels. So when you add pivot points onto your chart, it shows up as pivot point in the middle, and above the pivot point was its lines. A pivot point line in the middle, and above that pivot point line is resistance 1, resistance 2, resistance 3. And below that pivot point, it's support 1, support 2, and support 3. You're going to use these lines as obviously resistance and support. If price goes low, let's say price is in an uptrend right now, and you pull out your pivot point indicator to see if price is actually retracing or if it's reversing. Let's say price goes down, it touches support 1, it goes down more, it touches support 2, and it keeps going down. That obviously tells you that price is actually reversing. But if that's the opposite and price respects that support level 1 and goes back up, then that tells you it's a retracement and not a reversal. So that's I forgot to show you how it looks. So for the Fibonacci retracement tool, this is how it looks right here. Goes up. It uses this line right here as a support, and it goes back up. Support goes back up, and for a pivot point, this is how it works, or this is how it looks. It's support 1, support 2, support 3. It uses these lines here as support, and it doesn't break through, but it goes back up. So for the next one is using trend lines, and how you can use trend lines to see if price is making a retracement or reversal is like this. Of course, you have your trend line going down or up. Every time price touches your trend line, you see that line as, let's say, resistance or support. If price breaks through that trend line, then price is reversing. If price touches that trend line but comes back down, price is just making a retracement. So that's how you could tell if price is doing a reverse, if price is reversing, or if price is retracing using trend lines. I'm going to show you how that looks right now. Just like this. Price goes up, touches the trend line, comes back down. It's respecting the trend line right now. Price goes up, touches the trend line, comes back down. Price goes up, but this time it doesn't respect the trend line. Well, it respects it here a little bit. It respects it here a little bit, but it comes back down, and this time it breaks through the trend line. It retraces a little bit and skyrockets up. So this tells you that price is now reversing, and it's no longer a retracement. And how you can protect yourself from a retracement or a reversal is by using a trailing stop loss. If you do not know what a trailing stop loss is when you place a order to your broker, telling your broker that there's a specific amount of pips that your stop loss will trail behind your order. So let's say you open a buy order and you tell your broker you want your stop loss to trail, let's say 10 pips behind your order or whatever. Every time you receive, let's say, 10 pips on your buy or sell order, your trailing stop loss then moves up 10 pips. But if price moves down 10 pips, then your trailing stop loss will not move down 10 pips. Your trailing stop loss will stay the same, and it will then take you out of the trade. So that's how you protect yourself from a retracement or a reversal. Yeah, that is what I learned for work block or work session B. Right now I'm tired. I am about to go edit this video and go to sleep. But one thing I learned recently, and it's something that like I can't try to figure out why this thing kept happening, and it's that every time I was working, for some reason during the day I would just have a crash. I would just crash out. Not crash out in like in an angry way, but like I would be working and then an hour in, I would just fall asleep. I would just get so tired. And even if I was to drink coffee or whatever, even if I was to get an espresso shot, I would still fall asleep. I don't know why that was. I don't know if I spoke about this in the first part of this video, but yeah, I'm gonna talk about it now. So even for yesterday, right? That's why I couldn't finish yesterday, is because I drank my coffee. I had an espresso shot and coffee. I drank it. I felt okay. Everything was okay. And an hour into the work session, I just fell asleep. I was so tired. My eyes were just getting lower and lower. I was just so tired. And I was not understanding the reason why. So, with the help of ChatGPT, I figured out that the reason I kept falling asleep was because I wasn't getting enough sleep during the night. And the amount of sleep I was getting during the night was like, I would say, no, 2 to 3 hours max. 2 to 3 hours max every single night. And I thought that coffee would help me stay awake during the day, even if I slept 3 hours at night. But that isn't the case at all. As ChatGPT said, coffee can go so far. If I don't sleep, then coffee can't really help me at all. It can only help so much. So yeah, what I realized was I need to get more sleep. And coffee will give me the extra energy that I need to actually stay awake during my work sessions. Yeah, so that's what I did. And for so was it? No, it wasn't yesterday. For today, I got a sufficient amount of sleep. I thought today I started my work session at, what time I started? I started at like 7. Yeah, 7. I was sleeping. Yeah, I was sleeping. I was so tired. I tried waking up today at like 6:30. My body was not going with it. I was just so tired. Trying to give myself 30 more minutes. At 30 more minutes and not work at all. I was so tired. I was very tired. Yeah, so I woke up pretty late today. And then now, although it's night, I drank my coffee and I got through 2 work sessions. I haven't did that in a long time, you know. So yeah, so now I figured out the reason why I kept falling asleep during the day, even though I drank so much coffee. So yeah, let's hope the future work sessions is different now, you know. Now I know that all I have to do is just get enough sleep during the night, and then yeah, I should be up, or should be able to be up during the day to actually do my work sessions. But yeah, that's it for day 6. Yeah, so I'm gonna go to sleep right now. I need to get some sleep for work in the morning. I have to go to work tomorrow morning, so I gotta go to sleep, and then yeah, I'm gonna see you guys soon. All right, had a good work session today, and for the next course of baby pips, I'm learning breakouts and fake outs. So yeah, that's something I really want to learn, because that may be the strategy I'm going to be using to trade in the future. So yeah, that's something I really want to learn. So yeah, I'm gonna see you guys for tomorrow. Yeah, let's go to our session. Yeah.